Today we're going to look at how my investments in Indian based companies are faring. The reasons I invested in India are many. So favourable demographics. India has a young population, median age is 31 versus 42 for China. Digitisation is proving to be transformational in rolling out goods and services to India's 1.3 billion population, e.g. finance services, supply chains. Hugely under-penetrated marketplace, from housing, credit cards to hair conditioner. The structural growth potential of India is clear. Reform agenda has now expanded to include labour, land and agriculture. This will help to further open the economy. Existing reform agenda also includes big spending of infrastructure, making India more business friendly and recapitalising the banks. So this is an update on my portfolio held on the Trading 212 app of Indian stocks. A quick review. We've got Aberdeen New India, and this holding is up 13%, and Aberdeen New India is an investment trust with its objectives is to provide shareholders a long-term capital appreciation by investments in companies which are incorporated in India. That's the first one. The next one is India Globalization Capital Incorporated, and that is not doing so well. That's down 31%, and this company is a similar one to the previous, engaged in development of cannabinoid-based therapies for indications such as Alzheimer's diseases and pain. IGC operates through two segments, life sciences and infrastructure, and that is India Globalization Capital Incorporated. It's quite a different one. I sort of told you incorrectly there. But they're not doing so well. They're down 31%, Indian based. The next Indian one is Infrastructure India Plc, and we're down 55%, which is probably the worst performing one of my group of holdings, which give me exposure to India. And this company, Infrastructure India Plc, is a closed-ended investment company. The company's investment objective is to provide shareholders with both capital growth and income by investing in assets in the Indian infrastructure sector, with particular focus on assets and projects related to energy and transport. But we're down 55% at the moment. But as we're coming out of COVID and the economy is opening up, I think that will improve. iShares MSCI India were up 19%, and it says here instrument details. This is an ETF which gives me exposure to Indian-based companies, and I'm up 19%. The next one is JP Morgan Indian Investment Trust PLC, and I'm up 9% there. And it says here, JP Morgan Indian Investment Trust PLC is an investment holding company. The company's objective is to achieve capital growth from investment in India. The company invests in a diversified portfolio of equity and equity-related securities of Indian companies. So it's given me exposure to the Indian market. JP Morgan up 9%. Luxor MSCI India up 19% also. And the instrument details as such here. This is an ETF, exchange traded fund, where it invests in India to give me exposure. And the next one, last one in my holding, is Ashoka India Equity Investment Trust PLC is an investment trust. The trust's investment objective is to achieve long-term capital appreciation. It primarily invests in securities listed in India and securities of companies with a presence in India. So that's given me exposure to Indian companies, and this one is up 35%. So of the 1, 2, 3, 4, 5, 6, 7 trusts or companies I'm investing in, which give me exposure to India, they're all up. The first one's up 13%. Not all up, no, some are up and some are down. First one is up 13%. This one's down 31. This one's down 55. This one's up 19. This one's up 9. This one's up 19. And this one's up 35. But I think as we're coming out of COVID now, things are looking good, and I think India is definitely the place to look to invest for possibly the long term. Hope you found this interesting. Until next time, I bid you a really successful investing adventure.